bringing in Dharmesh Kant of IndiaNivesh Securities. He's joining us on the show right now. Dharmesh, a very good afternoon to you. Volatile, to say the least, on the index. 1.5% given up, but it's 2.25% on the Nifty Bank as well. So today is probably a day that we've not seen in the last 7 days, the kind of the quantum of the correction that we have seen. Probably aligning itself to the overall weak structure that we've been talking about for some time now. What would you be recommending to clients, and how would the trading or the investing approach change?
Yeah, good afternoon. Again, the volatility is back in the market after last week's recovery. It is being sold into, and macros have suddenly again turned worse, be it currency depreciation or the crude oil volatility, which we have seen in the spike up there, and geopolitical tensions all surrounding. I think this continuity of bad news flows, be it domestic news flow, Hero MotoCorp going on for VRS kind of a scheme. Steel prices at all-time low, 1 year low in domestic market, and demand not picking up. Things are not getting better. I think it's getting more worse. And this is the normal flow from slowdown to recession kind of environment takes place in such a scenario. So we have been skeptical on the market for quite some time, and even the cherry picking which we try to do in, say, pharma stocks or a few of the PSU banks did not pay off well. In fact, the sustainability of gains on individual stock prices has been a big challenge, in spite of numbers coming off very well for the pharma for the Q1 FY20 numbers as far as they are concerned. We believe that going ahead, pharmaceutical is one space which will still find investors buying traction, and because the domestic market has picked up, the growth has been in double digit of all pharma companies in domestic formulation market. Though pricing control has been there, but I think the blended realization part has bottomed out from here. US market has also stabilized, and any currency depreciation going forward would be aiding them to their margins. So there, Sun Pharma or Window Pharma, Lupin looks much better play in the present market environment, and valuation comfort is already there. Window Pharma remains the topic, still trading at 13 times FY20 price to earnings multiple, with a growth trajectory in excess of 16%. So that remains the topic. Barring that, we are just watching it from the sidelines. I don't see value emerging as of now, the way the numbers are panning out and the news flows are doing the rounds.
Right. Well, it's for the longest time, Dharmesh, that we've been, talking about how Aurobindo has been trading. The valuations look at least attractive, trading at 10 to 11 times 1 year forward earnings, but no major recovery actually seen when it comes to the stock price. That's still sitting with cuts of 3%. Dharmesh, nothing is improving. Then you said economic slowdown stays where it is. There were some days of, where markets recovered, but fundamentally macros remain the same. Looking at rupee depreciation then, which tends to create some bit of tailwind for IT companies, or for that matter exporters at large. We've already seen outperformance from a couple of these IT companies so far this year, be it Infosys, which has given you good returns, TCS is also up. Would you venture out in this space, treating it as safe haven, also keeping in mind that fundamentals in the macros don't change then, at least for the next 5 to 6 months?
See, nothing is safe haven in this environment which we are as of now. Even the stimulus measures by ECB, or if FOMC comes out with a rate cut, these are alarming things. These are not for good markets. These are like medicines which are given to patients to recover. So that is the main contention, that things in economy has not been recovering. It's rather decelerating and at a very quicker pace. A real rate of return is diminishing everywhere, and then why IT spendings will increase? What makes one feel that IT spendings will be higher? And the stock prices, look at Infosys, the valuations are very high. It's not a cheap valuation for Infosys or TCS for that matter. So I would not take this. It may be a trading blip for a couple of days, but again, sustainability of gains is very difficult to predict. Having said that, I think Tata Elxsi is one counter in the IT space where I do see some value creeping in. The last 2 quarters numbers were pretty bad, and the stock was beaten up more than the numbers were bad. So I think there some valuation catch-up comfort has been created. Other than that, other stocks will not give you a sustainable return. As you rightly said, next 6 months nothing looks to be changing, and to my mind it will get worse than better from here on. So better avoid them. But yeah, Tata Elxsi, one can do a staggered manner kind of a buying approach out there.
Okay, that's Tata Elxsi. That's Dharmesh's call from the ID pack. The stock, however, today is down about 3 to 4%, and the markets, as we've been highlighting, are witnessing a very sharp decline in today's session. So, good time to bring in one of the top technical voices that we have. Jay Bala of CashTheChaos.com joins us on the show now. Hi, Jay. Good afternoon to you from India, and thanks a lot for joining us. 180 points decline coming in for Nifty. Bank Nifty down almost 660 points in trade. Are we poised for further downside from current levels? What are the charts indicating?
Yeah, we might be done with the selling for the day, but we may not be done for the next few days. Basically, the market has come out of an important pattern, and the pattern price objective comes close to 10,300 on the Nifty. So, we are looking at fresh, swing lows for the expiry. So I think we'll see 10,300 at least once before the September 26th expiry. And, just out of the money, puts are quite cheap at current levels. So you might want to, make use of one of those 10,600 or 10,700 puts, given that, that's likely to, market. I expect the market to touch 10,300. That's a good way to, adjust your risk reward at the same time be in the entire move.
Jay, you're suggesting by the expiry, which is in September 26, Nifty will touch 10,300?
On or before that.
On or before that. Okay. So you're advising to buy puts or write calls, which will be a better strategy?
That's right. Yeah, even writing calls is a little more margin intensive. But, puts, you can fix the risk that you are taking, and you can be sure, if that's the amount of risk you're willing to forego if your, call is going to go wrong. So you can fix the risk reward. Whereas with writing a call, the risk is a little bit unlimited on the, the call, your market objective goes strong. It's a little bit of higher risk. Yeah, but still that's also a good strategy, and is a good, you can write more calls if your, risk profile can actually afford that, and you can bag all the premiums.
Yeah, but at this point, if you want a slightly more conservative approach to play the markets, probably going long an option is better than writing an option. So the 10,300 put probably is something that, which is out of the money currently, is something that Jay is recommending. Aside from that, now, Bank Nifty, Jay, that's been the key culprit of today's fall as well. Would you recommend shorting this further? Do you think it can break below 27,000? Obviously, if you're expecting the Nifty to go down to 10,300, Bank Nifty somewhere closer to 26,500, thereabouts?
A very fair question, Devin. I know, yeah. I think this time it's the banking index that's going to lead, and Axis Bank in particular is looking very weak. And HDFC Bank had advised your viewers to short on the budget day, and I said, a medium-term price objective of about 1,900 for it. So that's still pending, and it's on in the right direction. And so, these two banks are looking particularly vulnerable at current levels. So, and Axis Bank in particular is more weak than any other private sector banks. So I think the equivalent level of the banking index is about 26,000 to 25,400. So you can short the banking index, or you can buy puts there.
And aside from the two banking names that you highlighted, anything else from the broader market space in terms of individual stocks, Jay, that strike your attention?
Yeah, L&T is particularly vulnerable, and I'm expecting it to drop to somewhere between 1,250 to 1,200. So negative on L&T too, and Reliance, didn't respond to an important market expectation, and that's also cooling off. So Reliance, I don't have an exact price level, but L&T I have an exact price level between 1,250 to 1,200.
All right, just last question, Jay. We've seen long unwinding coming in for these heavyweights like Reliance as well as HDFC in last two sessions. But the auto space, which did see some bit of recovery in August, Nifty Auto Index is back in the red considering the sentiment is so weak right now. Is there any auto stock where you would advise shorting at current levels?
I think it's not a great idea to short autos once again. I think the autos might take a little bit of breather. They could have gone a little more higher. The Nifty Auto Index could have gone somewhere close to 7,700. That was my objective, but it's come to 7,500. So that's good enough for a correction. I think it's going to be stuck in this range of August, September, and not go either way on either direction much beyond that. So it's going to consolidate for a while before the next leg down begins. But you might want to look at other ideas other than autos to short.
Okay, Jay, we leave it at that note. Appreciate you joining us today and taking us through your technical views in the market. And let's see whether index, that's Nifty, touches 10,300 by September 26th. That's the time when the monthly expiry takes place. And as we speak, Nifty, it is trading around the mark of 10,825. I'm going to take forward that auto point. Dharmesh, anything from the auto space? Numbers have not improved, but if one were to see a recovery in the coming days, once again, that could take time. But would you look at this space? Is it giving you valuation comfort at current levels, or you would wait it out?
No, we have to wait it out because today we are having our auto dealer conference at our office. So we have all the Scots, TVS, Maruti, Hero Motocore, everybody is there in the office, and our discussions with them, there's a gloom-doom kind of a scenario among all the dealers across India. I mean, be it Mumbai, Maharashtra, Madhya Pradesh, UP, everybody is sensing trouble. The inventories are very high. In fact, 1 lakh units of vehicles has been dumped at the respective places, all put together, and production cuts are there. So this 1 lakh inventory which has gone into the dealers number is already there in the numbers which we saw in the earlier months when the company declared the number. So going forward, I think there would be a more deceleration, there will be more degrowth in the numbers which are going to come, and festive season will again be a dampener. So let's wait it out, because again it's a relative term. PE multiple is price by earnings. If earnings fall further down, so even this PE multiple will look higher. So one has to wait. I think one has to give it a slip for at least 2 quarters. So this calendar year is gone by. Maybe from next calendar year we can see some recovery, but that time will only tell. As of now, there is no indication from any side whatsoever which suggests that bottoming out may be in place.
In fact, there was a hope that in the second half of this calendar year, ahead of the festive season, probably there could be some bit of recovery which could come for the auto space, but that's exactly not how it's panning out. Though the companies are trying their best, as per reports, companies like Maruti have been offering steep discounts ahead of the festive season. Nifty Auto Index, by the way, currently trading with cuts of about 3%. Sachtanand, Hero Motocorp is down 6% in trade. If someone's holding any short position here, what's the target on the downside?
Well, the immediate support for the stock is somewhere close to 25-30. Probably, one can continue the shorts, but it's better to, unwind them somewhere close to this particular level. So 2500 is also corresponding with the options data. So probably, 25-10, 25-15 would be a good level wherein the stock could again face some good support. So in case if someone is carrying forward the position, I think that will be a level where they should unwind it.
Okay, and my producer tells me the stock's fallen below its 100-day moving average in today's trading session. But one stock which has remained strong, though it may have come off the day's high currently, and that's your top F&O gainer as well. Arvind, we did highlight the stock at the start of the show. It's a beaten down stock, by the way, down 40% so far this year. It's up for the 8th straight session. Amar, considering the move that we've seen from the lower levels for Arvind, I was checking the futures. There is some build-up which is coming in terms of open interest increase. Is it a meaningful pullback? Would you play this rally or you would stay away?
Well, I would say that looking at Arvind is positive on the daily and the weekly charts, but the long-term charts, they continue to be a cause of concern. So what's likely to happen in Arvind is that it could, because on the daily charts, it's now trading in overbought territory. And also if we look at the stock going back in August, it had made a high of 60.9 and currently today it has made a high of 59.1. So ideally somewhere around 60 would be a very strong resistance for the stock, where the stock would meet with a selling pressure. What's working in the stock's favor is on the weekly charts. The stock has turned positive, so the stock has a potential to rally towards 63, 65 odd levels once it sustains above 60 levels. But again, one should be, I would say, cautious on this stock and book profits at the same time.
Okay, Dharmesh, hi, this is Agam. Just wanted to understand how you're playing the oil angle, or if at all there is anything to do with that, specifically when it comes to crude oil linked input costs. And is there an opportunity, or is this something that doesn't have a very large impact at this point in time, considering the way crude has moved?
Hi, Agam. No, I think this crude will cool off. This is just a temporary blip in the prices. This is not a very significant event. It's not going to blow up in a big way, because see, when there's a slowdown, nobody can afford for the inflation to creep in just because of the crude oil prices. So that is going to slow down the demand. So I think this understanding is very clear with the US government, European government, and all people, influential people across the board. So this one blip event has happened, but I think the better strategy would be to short crude oil from here if you are a commodity player, and you may long the stocks which has been impacted by crude oil. But again, that's a trading play, because I'm not bullish on refiners, but just for a trade one can buy BPCL, HPCL kind of stock because of this fall. Aviation, Indigo looks pretty well. I think that's one counter which one can look at buying on any correction as of now.
Interglobe was trading around its all-time high levels last week, but with the crude prices surging on Monday, we have seen that correction. The stock, however, has been giving you returns at least in the last 1 month. It's up 4%. Dharmesh, we leave it at that note. Thanks a lot for joining us and taking us through your views on the markets. I just want to just take one query. Amar, if you could come